Good morning, everyone.
Pastor name. Make it longer or shorter?
Okay, good morning. Welcome to the investment meeting for January 2015. Happy New Year. Quickly go around the room, introduce ourselves for the record.
Good morning, everyone. Rosemary DeBellis, designee for Police Commissioner Bratton.
Jerry Dennis, SIS, consultant to the fund.
Dan Torelli with the proxy for Al Cerno. Joe Alejandro, designee for Patrick J. Lynch, Mark Abdul-Jabbar, and John Puglisi.
Chris McGrath, PBA by invitation.
Bob Ganley, SBA, designee for Ed Mullins.
Lou Turco, LBA.
Michael Palladino, DEA.
Oh, Neil Messing, Comptroller's Office.
By
Sorry.
invitation.
Oh, by invitation.
John Dorso, alternate designee for the Controller's Office by invitation.
John Mercerberg, Controller's Office by invitation.
Martin Gantz, Controller's Office by invitation.
Susanna Vickers, Controller's Office, Controller's Designee.
Scott Evans, Controller's Office by invitation.
Antonio Rodriguez, designee for Finance Commissioner Jockey Huff.
Justin Holt, designee for Mayor's Office.
Bob Sanskisted, Pension Fund by invitation.
Kevin Holloran, Pension Fund by invitation.
Carolyn Wolpert, alternate trustee.
Just for clarification, I have Roy Victor's proxy, Lou Turco with the LBA.
Nicole Giambrisi, Pension Fund, present by invitation.
Okay.
Are we all confused enough?
By invitation.
Should we start before we talk to each other? Is that designee
By-
by invite,
Hey.
invitation?
John.
Leon Dunklin, Controller's Office by invitation.
Okay, with that, the control.
Before we begin, myself and I'm sure others here are also at the meeting. We're going to leave here in about 15 minutes. We have to go to the actuary selection meeting, so at that point, Dan Torelli will have the proxy for my three principals.
Did you get this, man?
Okay.
Thank you, Brian.
Okay, thanks very much. We have a fairly short agenda today, so we shouldn't run too long. One adjustment to the agenda, the trustee education discussion will take place in the public agenda, not the private agenda. That was an error. Apologize about that. And so we've handed out a revised agenda. We'll talk about monthly performance and then the trustee education. We're now up to November in terms of the reports, and if you turn to page 37 of the monthly handout, you can see that November was an up month. The police portfolio was up about 1.25% versus the benchmark of 1.45. In November, we were continuing the up and down motion of the markets that has generally been in a flat to slightly up trend since the middle of the year. Subsequent to November, of course, the major event has been the collapse in oil prices, which is really changing the whole landscape of the investment environment as it becomes apparent that the oil price will be set more on economic terms and less on political terms going forward. So our managers will be in the process of adjusting to this new world, and we should watch it carefully. There are parts of the U.S. economy and the global economy that are, harmed by this, and certainly the oil patch, all of the shale oil and other marginal producers, and all the infrastructure that comes with it will be negatively affected. Positively affected will be the U.S. consumer. This is effectively a huge tax cut for consumers. Very meaningful for people at the lower end of the economic spectrum in terms of the impact on their ability to consume. So the market is in the process of digesting these different dynamics. It will change economic expectations, and it's really quite significant. I'll talk later about our asset allocation. It doesn't change much because of this. And Martin will take you through some of the ups and downs during the month, and I'll be back to talk about asset allocation. Martin?
Yeah, excuse me, so, turn to page, I promise you I have the page marked out. Page 15, continuing on the theme that Scott was talking about, and also what we talked about in previous months, the U.S. economy has been growing faster than most other developed market economies, and it's finally hitting the dollar where investors are investing in a stronger economy with an expectation of rising rates. And so you see from this chart, the dollar index is pretty much at the high, and in fact it's at I believe, a 5-year high, as you see here. And the euro on the next page, that's partially because of the euro and the yen. We don't show the yen here, but the yen also is at a multi-year low against the dollar. But the euro on page 16, you can see, while it shows here 122 at the time that we printed this, which was 29th before New Year's, it broke 120 yesterday, and so which was a 9-year low. While it looks like the dollar went down, it's really the euro versus the dollar. So, so with the European currency declining versus the dollar, and other major currencies declining versus the dollar is strengthening, and that has ramifications for importers, exporters, the price of oil, the price of gold, and lots of commodities. And it certainly has impact on the emerging markets, which have a lot of their debt in U.S. dollars, and which is partially why they've had some volatility. Talking about volatility, if you turn to page 18, this is the VIX. It's a little blip over here. The blip towards the end on the right was in October. If you remember, the first half of October was a very volatile time, and then all of a sudden things calmed down and we hit new record highs. As you see, it came back down. But right towards the end of December, and the VIX tripled at that time, it came back down. And right towards the end of December, there was maybe a week before the end of the year, there was some volatility in the market, of course, unlike trading, but volatility. So, and that came right back down until yesterday, which was a bad day. So, the market has become more volatile and more focused on the ramifications of what's going to happen when rates go up. When do rates go up? What will the effects be? What does it mean that the U.S. is doing better than other developed markets? And this is what's going on. The 10-year Treasury ended the year, if you take a look at page 20, it ended the year close to this number. It ended the year near 220 or so. This was as of 12/29, so it was just a couple days before. You'll remember at the beginning of the year, if you take a look at this, we were right at 3%. And at that point, because the tapering discussion had entered the lexicon and the Fed was reducing their QE, which they finally exited, although the balance sheet is still $4 trillion, they're no longer buying new securities or new assets. The question was, how much will rates go up? Well, on the way up, they've gone down. And that is, there are several factors due to that, and that has certainly benefited the government and their interest costs. It's benefited homeowners in getting mortgages. It's benefited companies trying to borrow money. It affects everyone. The question, of course, is when do rates rise? And that's something we've been asking for years. So I can't give you an answer. I don't have my magic 8-ball here with me, but at some point they will. Next page is an interesting page. I don't really usually go through this page. It shows in red high yield spreads, spreads over treasuries, which show here, this was December 1st, it was 449 basis points and investment grade 118. At the end of December, the 449 was up to 480. And that's part of what Scott was talking about. Because the price of oil dropped in half, there's a fairly significant minority of the high yield market that's in energy, especially in some of the more speculative energy companies. And so you'll see in the charts coming up that high yield went down in November when equities went up, which is somewhat unusual. And when we look deeper into it, it was because of the energy companies leading that, because of the price going down. After all, you read in the paper that I think the price of gasoline is down over 100, it's now over 100 days in a row. Go to Jersey, it's barely $2, $2 a gallon, and that will continue because those prices are based on prices from a few months ago, so that will continue. Turn to page 27. This page is here. So what did November look like? Well, as Scott mentioned, November was a good month. We did 1.25, and that's because the Russell 3000 in the first column on the left was up nearly 2.5%. EFA was up. Excuse me. Emerging markets were down, but there aren't many down numbers on the page, and that's why it was a good month. But if you take a look at the second page, you'll see high yield was down. That's the second group of numbers on the second page, and that's what I mentioned to you before about energy names within the high yield sector being affected negatively. REITs did particularly well because interest rates went down and equities went up, so they continued fiscal year to date. You see in the third column they're nearly over 9.5%, whereas the Russell 3000 was at 525. So Scott already mentioned on the next page what the return for the month was, 125. Fiscal year to date is up 173. We looked at December. We don't have official numbers for you because it just ended, but back of the envelope, December had some negative numbers there, so it probably takes away a little bit, and obviously yesterday was a pretty ugly day, but it's one day. So we'll have the December report for you, and so it probably goes down a little bit. It's impossible to say exactly how much, but probably not by too much. So how are we positioned? It's on page 30. Scott, do you want to take that? Or
Sure. It's largely in keeping with the structures that we've talked about, which we've brought the equity overweight way down. You can see the international is slightly underweight here. I believe we corrected that in December. We have pretty similar weights across U.S. Developed and emerging, flat to slightly positive. Underweight long-term bonds in blue, underweight tips in purple, and overweight short-term in gray. Now, the short-term is temporarily above the top level. That's because there was some transitional cash going as part of the skim as we moved money to the VSFs. And so as we took a snapshot at the end of November, it caught that cash. But the cash is now down under the limit as we've moved the money to the VSF. So steady as she goes in terms of the policy weights. We have no current plans to change the weights much in terms of being very slightly overweight. Equities equally distributed, underweight long-term bonds, overweight short-term bonds. That's it from that. Did you have anything else on this?
Just one more piece of news, and since it's a good piece of news, I want to deliver it. So if you turn to page 35, you'll see the monthly market values for the police pension fund, and as of November, if you remember last month we weren't sure which side we would be on, but as it turns out, it's a new record high market value all time for the police pension fund of $34.6 billion, and the 10-year return is now 7.28.
So this represents a recovery of all losses since 2008, netting, of course, any other contributions.
And that's why there was a skim. That's right. Yes.
Just want to make sure that that was clear, because year and a half ago, it was a doom and gloom scenario by the former actuary. I just want to make sure that everybody's clear. Of course, the former mayor predicted the end of Western civilization as a result of pension costs going into the future. So I just want to make sure, Mr. Bloomberg, if you're watching, we covered. We'll survive. Thank you.
And that's all I have.
Great. Thanks very much. Why don't we move on, because I know some of the...
Question.
Yeah, sure.
So, looking at the asset allocation, what would you say that, you said that the cash out of the rebalancing range is due to the transition to the VSF. Do you know where it's at around that, like now?
Yeah, it's up on what's about 3/4 of the way up the...
It's about 3/4 of the way there, and also understand what Scott was mentioning in previous months is that it's not cash in the way you think of cash as being overnight cash. The guidelines allow it up to 4 years, and so the Core Plus 5 has a whole of 1 to 5 year treasuries. So what we did was we earned some yield by going out a couple of years, but have limited duration risk in that.
Our structure, Antonio, as you know, the Core Plus 5 puts us, we have a purposeful overweight to very long-term bonds because of the liability structure. And so we're sort of overweight long-term bonds relative to the market itself. When you're in an environment where rates are more likely to be rising than falling, that's disadvantageous. So we offset that by holding short-term bonds, two-year paper for the most part. And it shows up as cash because of the way we bucket them.
So would you say that is essentially 2-year, or like what's kind of the distribution between?
The majority is 2-year. It varies based on the cash coming in and out of the fund, transitional fund monies going to benefits and so forth. But the great bulk of it's in 2-year paper.
I just want to excuse myself, and Danny Torelli has the box. Thank you.
Would it be possible, because it's going to be an ongoing position, to get some sort of a breakdown of what's in that cash bucket as far as credit quality and maturity and the like?
It's not very complicated, Justin. It's almost 100% U.S. government obligations. It's basically 2-year treasuries. But we can print it out for you.
Yeah, I'm just wondering if this is going to be an ongoing position, say, because we've been waiting for rates to rise for a while. If past isn't an indicator in the future, it could be 5 years in this.
Yeah, why don't we give you a printout that's going to show 75% plus in 2-year U.S. government obligations, and it's pretty uninteresting, but we'll give you a snapshot of it.
That would be great. Thanks.
Okay. Yeah, Colleen, mark that down. Okay, why don't we move on to the trustee education update. I just want to get back to you. We went to all 5 boards to see if there is interest in doing special education sessions. We would do these sessions by getting all 5 boards together and talking about topics of interest. Sorry? Yeah, so we have, you should have an update in front of you. And when you look at the subjects that received the most votes, the votes were on the topics of interest page, but there are basically 3 topics that all or most boards wanted to talk about. One was fiduciary duty. Some people put it in terms of a primer for new trustees. Others looked at it from more of a governance angle, but a refresher course on what the fiduciary duties of a trustee are, where are the lines for that, how should one look at that, and that was one of the big ones. The other was governance, closely related item, and finally fees. Everybody's interested in fees. Everybody's trying to minimize fees for a given level of performance. Close second were things like asset allocation and risk management. We're going to focus for the first couple sessions on these first 3 items, and because there seemed to be universal interest, and because it seemed to have the most enthusiasm, we are suggesting, as you can see on page 4, that the first session be on fiduciary education / new trustee training. The topics are, pretty straightforward. What's the role of the trustee, duties and obligations? What are the trends in the industry, best practices, et cetera? This should complement the training that each of the systems received. We can sort of update the training that you've got in the past. We can do this a number of ways. We have resources at the Controller's Office. I think the city has resources where we could have people come and talk to you. Just as an example, Richard Simon, who works in the Office of General Counsel in the Controller's Office, gave a 30-minute session on fiduciary duty and what that means to all of the BAM employees. It was something that we're fiduciaries, and I want to make sure that every single one of the employees in BAM gets that, understands what fiduciary means, that we're acting in the express interest of our beneficiaries, period, full stop. So Richard did a very nice job of laying that out. But we're open. If you'd like to get outside speakers, other resources, in the police department or in the city at large, mayor's office, we're open to that. We could get outside speakers. You know, there's a guy named Keith Amixshier, who is a professor in Toronto, and is a real thought leader on these topics. He's come, I think, to speak to the systems in the past. We've actually sent people up to the Rotman School in Toronto to train. They have a whole program on training fiduciaries. And they work with systems in Canada and the United States and Europe. And Keith does an excellent job. I know we could get him to come and give a little session. It cost us, but not too much. So we're open to whatever ideas you'd like to have. We need a consensus among the five different systems, but we wanted to throw that out. And if you had other ideas, we'd be happy to entertain them. So it said,
Requires no action, right?
do I take the nods that you guys are comfortable with us proceeding?
Comfortable with you
yeah.
pursuing educational opportunities for the trustees.
Okay, okay.
Antonio, do you want to say something?
No, definitely. No, I think we're comfortable with the topics and and thinking about kind of fiduciary training for the boards. One thing we were thinking about was, at some of the other systems having kind of either like Cohen Wilstein or a few of the other kind of outside experts being able to give the fiduciary training. I think we would be, really thinking about, like, if we're thinking about who was kind of giving the training, we would be comfortable with having an outside source do it. That's not necessarily either counsel or kind of outside counsel doing that type of training.
I think speaking from the side table, we concur with your
Yeah, I agree
conclusion
with
as
that
well.
as well.
Having outside people instead of
I think that,
other trustees.
exactly, instead of having one trustee train
Train
other
another
trustees, I think it would be more appropriate to have
Okay.
outside professionals.
We have no problem with that. I mean, our idea of doing the internal thing is just to save money, but we're absolutely happy with it. Keith seemed like the type of resource that you'd be interested in the sort of governance area. And, I know he's been popular in the past. Not universally popular. At another meeting, I'll have a little bit more trouble with that. I don't know why, but you guys are comfortable. Okay, good, great. That's all we had, Madam Chair, for our public session. We're ready to entertain a motion to move to executive.
Make a motion that we go to executive session.
Okay, just 5 minutes to